Good morning, viewers. It's Wednesday morning, May 21, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money's 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Please mention your email in the comment section so that we can forward you the daily market wrap in your inbox at exactly 7 a.m. Eastern Time each weekday. US stocks pulled back from their recent rally on Tuesday amid growing warnings that investor relief over cooling in trade tensions and in US inflation may be misplaced. US stocks fell on Tuesday, ending a 6-day winning streak for the S&P 500 as losses in big tech weighed on major indexes. The S&P 500 declined 0.4%. The Dow Jones Industrial Average lost 115 points or 0.3%, while the technology-heavy Nasdaq Composite closed 0.4% lower. The Dow snapped 3 consecutive sessions of gains, and the Nasdaq fell after a 2-session winning streak. Since the US and China struck a deal to temporarily roll back tariffs last week, markets have been shaking off fears of a trade war and enjoying a rally. But concerns are growing, including from JP Morgan CEO Jamie Dimon, that investors' confidence could be overblown. Tariff levels remain high, and a growing chorus of Federal Reserve officials say they see interest rate cuts on hold until September amid trade uncertainty. The stock market has mostly been placid in recent days, shrugging off concerns about fallout from President Trump's trade policies. Even after he walked back his aggressive Liberation Day tariffs, most US trading partners still face a 10% baseline levy. Many economists expect those tariffs to ripple through into price increases and slower growth. 8 out of the 11 S&P 500 sectors fell, led by losses in energy, communication services, consumer discretionary stocks. Utilities, healthcare, and consumer staples equities made gains. Alphabet and Amazon both fell more than 1%, while other technology heavyweight stocks, including Apple and chipmaker Nvidia, dropped about 0.9% each. Nvidia is scheduled to report quarterly earnings on May 28. Out of the Magnificent Seven tech stocks, the only one to post a gain was Tesla. Shares of the electric car maker rose 0.5% after Chief Executive Officer Elon Musk said he would significantly cut back on his political spending and that he expected to remain head of Tesla 5 years from now. Focus came on Home Depot's results. Shares on Home Depot fell 0.6% after the retailer missed quarterly profit expectations and said it would work to keep prices steady despite tariffs. That stood in contrast to Walmart, which signaled last week that its customers would face tariff related price hikes, an announcement that provoked criticism from President Trump. Home Depot's profit fell short as same store sales faltered, but its revenue topped forecast and the home improvement chain held to its previous guidance. Its shares fell in late trading. Meanwhile, Trump's tax bill continues to face challenges moving through the US House. Trump on Tuesday ventured to Capitol Hill, seeking to reassure and prod both the party's fiscal hawks and a contingent of mostly blue state Republicans looking to boost the cap on the state and local tax deduction. Much of the drama of recent days has taken place in the bond market, stoked by concerns about a huge tax and spending bill that is expected to add trillions of dollars to the national debt and a downgrade of the US late last week by Moody's ratings. Analysts estimate the sweeping tax cut bill would possibly add $3 to $5 trillion to the federal government's $36.2 trillion in debt. Longer dated US Treasury yields edged higher amid the US fiscal concerns. Benchmark US 10-year note yield rose zero point 0.2 basis points to 4.477% on Tuesday, its second consecutive daily increase as investors have shed long-term government debt. The 30-year bond yield, which is even more sensitive to perceptions of the country's fiscal health, gained 2.3 basis points at 4.965%. On Monday, it touched 5.037% in intraday trading, highest since November 2023. The dollar declined again, weighed down in part by more cautious remarks about the economy by Federal Reserve officials. Oil prices were little change, and amid uncertainty in US Iran negotiations and US and Russia Ukraine peace talks, Brent futures slid 16 cents, while US West Texas Intermediate crude is 13 cents. Gold price rose more than 1% as the dollar weakened further. Spot gold rose 1.86%, $3,289 a troy ounce. My take: beneath the buzz is the market rally ignoring tariff storm clouds. Hello and welcome. Let's talk about what's really driving this market rally and whether investors are ignoring a very real risk. Yes, the stock market is on a tear. Major indexes are surging and tech stocks are back in the spotlight. But here's my take: this might be a case of unwarranted optimism. Why? Because there's an elephant in the room: tariff risk. Trade tensions, especially with China, haven't disappeared. In fact, they are quietly escalating. The US is signaling tougher stances on strategic goods, electric vehicles, semiconductors, and green tech. If tariff returns or worse expand, we are talking about higher input costs, supply chain friction, and shrinking corporate margins. That's not just a headline, it's a hit to earnings and to investor confidence. So, yes, markets love optimism, but this current rally might be built on sand. Stay sharp, watch trade policy, and don't let euphoria cloud your judgment. Thanks for tuning in. I am Sunil Thakker of Sunny Talks Money, and that's my take. And that's a wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. I will see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it is all about money.